morning and welcome to this Thursday edition of Inside India. I'm Sri Jegarajah. Your headlines. India has signed off on a new joint venture chip plant between HCL and Taiwan's Honhai, which will be located in the northern state of Uttar Pradesh. India's inflationary pressures continue to abate, with wholesale prices sliding to a 13-month low.
Good morning. I'm on the sidelines of this year's APEC trade ministers meeting on Jeju Island, South Korea, where US tariffs looms large. Now, India, not part of APEC, but the country has launched a dispute process with the WTO in relation to US tariffs.
And we will be checking in with Lin later on in the programme on Inside India. In the meantime, let's take a look at the general landscape in the APAC markets. And it is quite a mixed picture and some disparity there with the Nikkei 225, the loss leader at this juncture, down by more than 1%. But we are seeing some resiliency in New Zealand, Australia, Taiwan and here in Singapore, with the STI up by just 0.4%. So broadly, a lot of these markets are struggling to find firm direction either way. Indian markets join us in about 45 minutes. Here's what Gift Nifty futures are indicating for the open: 24,724. So broadly, we're looking at some consolidation just below this level of 25,000. Didn't quite get there. Dollar rupee exchange rate is at 85.4010. Now, APEC trade ministers, as we said, are meeting in Jeju, South Korea, and they have released a stock warning today. Lin is on the ground and joins me now, clearly managing expectations with regard to global growth prospects. Lin.
Yeah, good morning to you, Sri. Great to be with you. As you say, big revisions down, both in terms of GDP growth for the APEC economies, 21 economies altogether, accounting for about 60% of global GDP, as well as trade growth. I mean, the numbers are pretty stark, but they certainly reflect a pattern we've seen, whether it's in terms of respective central banks putting out their revisions or the IMF in recent times as well. So APEC now seeing that for this year, regional GDP growth will fall from 3.3% to 2.6%. And in terms of export growth, basically falling flat from 5.7% last year, now down to 0.4%. That is the projection coming through from APEC. And they also see that policy volatility when it comes to trade is set to ramp up potentially 9 times versus the last decade as well. And certainly, of course, this has all come off the back of what we've seen in terms of US trade policy, which analysts say is a structural pivot now from what we saw post-World War II and the global trading rules that they themselves advocated for as well. So certainly we are keeping one eye on the developments coming out of the trade meeting, the trade ministers meeting, keeping in mind that it is closed door, but we are looking for what will be potentially the statement to come out. And then certainly another eye, Sri, on the happenings and the meetings on the sidelines with the USTR, Jameson Greer here. We heard from Malaysia's trade minister. He met with Ambassador Greer already. He's set to meet with other counterparts as well.
Thank you for that, Lynn. And it's interesting looking at this from an India perspective. We had a guest yesterday talking about the Triple Crown event that Modi is trying to achieve, and that is 3 trade deals culminating in a US-India bilateral agreement. I know that you spoke to the WTO Director General there at Jeju, and we know that India has filed a formal dispute with the WTO against the US tariffs on steel and aluminium. What's the latest from the WTO's perspective?
Yeah, indeed, Sri. And of course, this is happening at a very interesting time because we know that India is one of the countries that has been highlighted to have that priority status in terms of negotiations on a potential trade agreement as well. But at the same time, we're hearing now this confirmation that India has filed this dispute process as well. And we did get a chance to speak with the Director General of the World Trade Organization, and she said that they're looking at it, but that they are also urging that the two sides are talking, which we know that they are. Let's watch.
I hope that when India and the US consult with each other on these issues, since they're having bilateral negotiations anyway, that they will be able to settle this and it will not have to go through the dispute settlement system. So we prefer that, even though we have a dispute settlement system, we prefer that you use more friendly means and approaches.
And, you know, one of the things that we're also tracking, Sri, is a lot of talk from APEC economies about realignment, about trade diversification. We also contacted India's trade ministry to ask about whether or not they might make another formal application into APEC and some of the other trading-related blocks as well. We wait to hear a response on that front, but certainly that is a lot of the action that we're seeing as well here. Sri.
Lynn, thank you for that. And it's a salutary reminder, isn't it, that even amongst allies, challenges do remain, and a trade deal and the path towards a trade deal is still going to be nevertheless slightly challenging. Lynn, thank you very much indeed. In the meantime, India has approved its 6th semiconductor plant. JV between HCL and Taiwan's Honhai will be setting up this new facility. Emily Tan joins us with more details. Hi, Emily.
Hi there, Sri, and we are tracking all the developments when it comes to the making of semiconductors, as Honhai has been working hard to further expand in India. We do know that they produce iPhones there in that market. That is predominantly for the U.S. market. But now with this, they have made a deal with India, HCL and Foxconn in a joint venture valued at $435 billion for a capacity of something like 20,000 wafers. We did get a chance to hear from the Indian Information Minister on this deal. Let's listen to what he had to say.
India's 6th semiconductor unit, which is being set up in Jewar, Uttar Pradesh, has been approved. Its capacity will be 20,000 wafers per month. Its chip production capacity will be 36 million chips per month.
And the commercial production on these chips expected to start in 2027. This, as Prime Minister Narendra Modi has made chip making a priority in the Indian economic strategy. Just a quick mention of Honhai, as we are talking about Foxconn and the Q1 report card. Profits of $1.4 billion in the first quarter of the year, up 91% on year. This is a record first quarter earnings. Strong demand for AI servers. Revenue from AI servers and general servers was up 50% year over year. With this, it's important to note, Sri, that the company, given some of the volatility that we've seen, the strengthening of the Taiwan dollar, together with the tariff uncertainty, they have revised their forecast for the full year sales to significant on-year growth, downgrading their outlook from an earlier projection of strong growth. Foxconn does not provide numerical projections for their sales, and on this projection and the downgrade, Honhai shares under pressure, down 1.8%. Sri, it's back to you.
Emily, great story, and Honhai really does seem to be paving the way for the entry of other big investors, quite possibly Apple and Tesla further down the road, and maybe an FDI boom if things go India's way. Emily, thank you for that. Right, we got wholesale inflation data yesterday reflecting signs of further easing and falling to 13-month lows. WPI index cooled to 0.85% in April from 2.05 seen in March, coming out better than what analysts were expecting as well. Inflation data too came out cooler than expected, giving more room for the RBI to cut rates further. let's take a close look at safe havens and broadly alternative assets. Gold is performing a little bit weakly in Asian trade right now, 3,155, down by 0.7%. In India, the overall rise in prices has led to an increased interest in digital gold. Public sector banks in the country also saw a huge surge in gold loans as one would comparatively get more cash for their gold assets. Right, let's do a deeper dive on the world of alternative assets and alternative investments and how those investors are positioning into the Indian market. Patrick Kennedy joins us now, founding partner at All Source Investment Management. Patrick, welcome to Inside India. And just paint the general picture for alternative investors, first of all. And does this narrative continue to favour capital outflows from China and into India's private capital markets? Or given how many are now perceiving the US-China trade talks in Geneva as something of a game changer, do flows now pivot back to China and away from India, perhaps?
Hi, Sri. Thanks so much for having me on. I would say that flows will continue to go into India. So since COVID, we've seen a large shift in private equity flows in general going into China, mainly because the country was shut down for much longer than most had expected, and therefore different manufacturing routes, different lines of business had to be created in places like Vietnam, India, Japan, so on and so forth. That also caught investor eyes. So investors are now looking at, again, places like India as somewhat of a replacement to China. Now, there's a lot of exciting things going on when it comes to India and the digitalization of the economy. As you know, in 2015, the Digital India project was kicked off by the government, and that really pushed forward a whole flow of projects that were geared towards innovation. And whenever that happens, whenever you have a regime shift like that that's supported by the government, obviously private equity takes notice.
Brilliant. You preempted my next question, Patrick, perfectly. And just help us understand how those digital India government initiatives like UPI, Unified Payments Interface, DigiLocker, e-hospitals are creating opportunities for private equity in growth areas from infrastructure to cybersecurity and financial services.
Great question. So UPI is 83% of the payments within India now, the digital payments on that platform. Mobile payments in general has gone up 43% just last year alone, year-over-year growth. As far as cloud-based growth goes, it's projected to grow at 25% year over year. So when you have organic growth taking place like that within the economy, private equity can come in and partner with a lot of the government firms to help facilitate that growth. And by facilitating that growth, profit from it as well.
One of our guests yesterday, Samir Kapadia, was talking about Prime Minister Modi's Triple Crown moment. And let's bring it back to the trade picture and trade deals that India is pursuing, whether it's with the UK, Europe or the United States. Does it follow that this momentum, if it does become material, translates into even larger private equity transactions in the Indian market over time, whether it's fintech, green tech, e-commerce or education? What are the sectors, Patrick, that you think will be in demand as a result of this?
Yeah, great question, Sri. So we think financial services, as I just hit on with mobile payments, will be very big. Cloud, believe it or not, will still be very big because the infrastructure around cloud needs to be built out. So this initiative, Digital India, was launched in 2015. Think of the U.S. from 2010 to 2020 and the explosion in growth that happened because of mobile, because of cloud. That's what India is in the thick of right now. So many would argue that we're going from more of an emerging economy to a developed economy. And during that transition, a tremendous amount of money can be made. You have players in there like Blackstone, Warburg Pincus, KKR. Some of the biggest on the planet are now taking notice to Indian markets. I think beforehand, the reason why you didn't have large players in that space are for a few different reasons. One, the currency depreciation over a long period of time was just too much of a risk. Inflation as well. So when you look at the period from 2005 up to 2015, The currency had depreciated, I think it was around 50% to the dollar. Very tough to make an investment in that environment and not accept or not think you're accepting a large degree of currency risk. Fast forward to today, the currency has stabilized, inflation has stabilized. A lot of it has to do with these initiatives. But what that does is create a playing field for private equity where you feel good about making an investment today and knowing, hey, 4 or 5 years out when I exit, I have a really good idea of what that playing field is going to look like based on projections.
Patrick, real estate has traditionally been a very popular hunting ground for alternative investment funds, hasn't it, globally? How are you thinking about this space in India?
Yeah, I like infrastructure over real estate right now, simply because you have more government backing around some of the large infrastructure projects. And when it comes to infrastructure, that's a hot theme right now within alternative investments. So you have a lot of dollars being raised at big firms, again, like Blackstone, KKR, so on and so forth. And because of that, because of those flows, I would tend to focus more so on the infrastructure component than the real estate component. The real estate opportunity with India, I still think, is a phenomenal one. However, I would focus more on local firms to implement that strategy than a large global firm like a Blackstone or like a KKR.
It's interesting you mentioned Blackstone, and Amit Dixit has been talking about this as a focus area. Digital infrastructure, including data centers and telecom towers. So given the AI boom that is still arguably nascent in India, would AllSource be pursuing a similar strategy?
As far as going after AI-themed projects, Sri? So, we think that cloud is still very much a big theme within India, and we have to get that right first before we really focus on AI within the region. I would look at cloud and the overall digitalization of India as more low-hanging fruit than some of the AI-oriented projects. Don't get me wrong, I think AI is going to change the world in a big way. And I do think that, a lot of money can be made within private equity with focusing on AI. But just like when the internet first came out in the late 90s, I think that a lot of these projects need to kind of crawl before they run, and you need to understand what the technology can do from a monetization standpoint before you put real dollars behind it. So therefore, we're looking at more proven technology, such as cloud, such as mobile, because we know it worked here in the U.S. We know that there was tremendous growth seen not only in the U.S., but around the world when those themes were pursued by governments. And now that we see the Indian government going after this and promoting those themes, that's something that we're really interested in participating in.
Patrick, what returns and performance is AllSource targeting in the Indian market?
Yeah, it's tough to talk about returns without getting compliance involved to approve, a disclaimer first, right? But whenever we look at a private equity fund, we usually want 10 plus what the S&P is going to do. So if the S&P does 10, we want to return around 20. If the S&P does 15, we want to return around 25. So 1,000 basis points plus the S&P is what we're looking for. And any e-liquid private equity fund, that's typically what we're targeting. The reason why is when you're going after private equity returns, you're agreeing to lock up your money for a period of time. So for the illiquidity premium, you want to be paid enough to not go into the liquid markets and essentially agree to tie your capital up for multiple years.
And when you look at the recent history, AIFs in India have consistently outperformed the index, haven't they? Alternative investment funds achieving an IRR of 21.5% between fiscals 2013 and 2024, and that's outpaced the BSE Sensex Total Return Index. So private capital is clearly not just participating, it's shaping India's growth story. So in more general terms then, Patrick, and not asking for specifics at AllSource, but can AIFs continue to keep up or even improve on those kind of return metrics?
I would say absolutely, Sheree. So when you look at just the basic index for private equity, the Cambridge Private Equity Index, and go back 35 years, okay, it's outperformed the S&P 500 by roughly 50% per annum. It's pretty much doubled the MSCI equity, and that's 35 years of data. So that's not just 1 year or 2 years. So the proof is in the pudding, and that's just the median return, or the median or average private equity manager. When you start to look at top decile managers, like a Vista or a Veritas or KKR, those numbers obviously can grow exponentially from that 15% it's done over the last 35 years.
Patrick, you're bullish on gold and have been since 2022, but gold market is not only evolving in India with the rise of digital gold, but some might say it may even be challenged by the rise of cryptocurrencies, especially if there is a younger cohort of investors coming to the market. Are cryptos, as opposed to gold, the better investment in India from an AIF perspective?
We don't think so. We think that crypto has a very different use case than gold. So gold, has been around obviously a lot longer than crypto has. And you're now seeing central banks start to look at gold as a replacement for currency risk. And now that you have a large institutional buyer like that, many traders are now looking at this as more of a buy and hold asset rather than a trading asset. And because of that, you have somewhat of a floor on the valuation. So we got bullish on gold back in 2022, really for three reasons. One, the central banks were starting to buy it after the Ukraine conflict. And two, inflation was really taking off, which drove our third leg, which we think volatility will continue to pick up and continue to be around for a while as long as rates are higher. So 2022 for us marked a very clear regime change in which we're going into a period of higher rates, higher volatility, higher geopolitical tensions, and we're exiting a period where we had lower rates, very low volatility, not much geopolitical tensions within the world. So what we're telling our investors, the biggest thing that you really need to be concerned about is recency bias, right? So what worked over the last 10 years may not work over the next 10.
Yes.
It doesn't mean you need to do the polar opposite, right? It just means that we're going into a very different environment, and therefore you need to look at a different tool set of investments.
Understood, Patrick. Final question. There's clearly room to grow, and we've heard a lot about white space opportunities in the Indian alternatives markets for growth in private credit, special situation funds, climate and deep tech. Are those future areas that you're interested in at Allsource?
Private credit especially. So private credit is a very large allocation for us. When you look at, again, just the index of private credit going back to 2004, it's only had one down year where it was down 6%, and that was in 2008 when the stock market was down close to 40. It's done an average return around 10%, with a majority of that being yield, with about a 1% default rate. Now, that's direct lending, right? There's all different types of private credit. Private credit is a very generic term, but when people hear private credit, they generally think of direct lending, which is lending to a privately held company and backing that loan with the equity and balance sheet of that company. Yes. I think because of all of the innovation that's going on, and now the private equity involvement with India, you're going to have a need for private credit as well, because there's going to be sponsor-backed loans that need to take place because of the private equity involvement in India. So that's one space that we're very interested in participating in.
Understood. Understood. Patrick, it's been a great conversation. Thank you very much indeed for joining me on Inside India with those perspectives. Patrick Kennedy there from Allsource Investment Management. We're back in 2 minutes. Welcome back. Interesting regional story here. Malaysia is extending a hand to Russia. Prime Minister Anwar Ibrahim is on a visit to Moscow. JP Ong is here to tell us about the highlights from that tour. And JP, the rationale behind this appears to be Malaysia wants Moscow to sponsor its full membership into the BRICS grouping.
Well, that might be one of the other objectives of Prime Minister Anwar Ibrahim on his state visit to Russia, which is actually going to happen over the next 4 days. As we know, if you want to get into the BRICS or become a full-fledged member the way Malaysia wants to, you'll have to court RIC, basically, or get RIC's approval, Russia, India, and China. And this could be part of it as well. And also probably one of the reasons why he's extended an invitation to President Vladimir Putin to attend the ASEAN summit and take part in the East Asia summit, where ASEAN as a bloc will meet with Russia, with other major countries like Russia, China, India, and the United States. And thus, you can also see why it's going to be an interesting talk if the Russian president does accept that, actually. They also talked about possible trade deals, actually, with Russia, and with Russia actually floating the idea of possible joint ventures with regards to oil and gas and nuclear power in Malaysia also. And also expressed that they might also be interested in exporting LNG to the world's 5th largest exporter of liquefied natural gas, Malaysia. So a little strange, actually, with regards to that trade deal. But also, of course, it's important to note that Prime Minister Anwar Ibrahim also brought up the issues with regards to the Malaysian Airlines aircraft that was downed or shot down in Russia. He did say that the Russian president said that they continue to be open to a full investigation but has to be done by a credible body. So again, that's still on the table. So a lot of things to discuss on his visit to Malaysia, Sri.
JP Ong, thank you very much indeed for that. We're back in 2 minutes. Welcome back. You're watching Inside India. Some of the stories we're keeping tabs on outside of India. The United States has imposed new sanctions targeting Iran's ballistic missile program, hitting 6 individuals and 12 entities. It's the latest in President Trump's maximum pressure campaign on Iran, even as both sides pursue talks. Donald Trump urging Doha and other allies to help Iran reach a nuclear deal during his visit to Qatar. And President Trump and Russian President Vladimir Putin will skip Ukraine peace talks in Istanbul, talks that Putin himself had proposed. Moscow will instead send a group of technocrats. Ukrainian President Volodymyr Zelensky is still heading to Turkey, challenging Putin to show up if he's not afraid. Israel has intensified strikes on Gaza, killing at least 80 people, including women and children. Airstrikes targeted homes in Jabalia, while new evacuation orders forced thousands to flee. This escalation comes as US President Donald Trump visits the Gulf region and notably not making a stop in Israel. Now, Boeing clinching a record deal during President Trump's visit to Qatar. State carrier Qatar Airways ordering 160 Boeing 777X and 787 aircraft powered by GE Aerospace engines worth $96 billion, with an option to buy 50 more. It marks the largest wide-body aircraft engine deal for GE Aerospace and the biggest ever haul for the Qatar carrier. CNBC's Dan Murphy spoke to Qatar's energy minister, Saad Sharida Al-Kaabi. Here's what he said on business with Trump and the US.
President Trump is a businessman. He also does not accept a deal that does not make sense. So he understands, or he would understand, nobody would ask us to do a deal that doesn't make sense commercially. Whether we're investing as QIA, we make our own judgments about projects that make sense for us. When we buy airplanes as Qatar Airways, we do our own economics and we do our commercial assessments versus other airline carriers that would be bidding. In the military, they do similar.
And you can catch more of Saad Sharida Al-Kaabi's interview with Dan Murphy on Access Middle East right after this programme. And Qatar's Emir hosted a state dinner for President Trump, also hosted a state dinner in Doha. Reliance boss and billionaire Mukesh Ambani was expected to attend this dinner, as per multiple reports. Remember, Qatar Investment Authority also has investments and a stake in the retail arm of Ambani's Reliance. Ambani was also present at President Trump's inauguration ceremony in Washington. And we are counting down to the market open in India. We're less than 15 minutes away. This is how we are shaping up ahead of the open. GIFT Nifty futures are predicting and pricing an opening number in the region of 24,740. So that would be a very modest incline if that did materialise, given where we left off for the benchmark at 24,667. Dollar rupee exchange rate 85.5360. Now, more Indian customers flocked towards iPhones in the first quarter of this year. Report released by IDC says Apple saw 23% on-year growth in the Indian market, and its iPhone 16 was the highest shipped model of Q1. This comes as Apple plans to increase its manufacturing in India. China's Vivo still remains the top bought brand. Overall, phone shipments were under pressure, though, due to weak demand. Let's get more on this. Bring in Navkender Singh, the AVP Client Devices and IPDS at IDC. Navkender, thank you very much indeed for joining me on Inside India. So the overall smartphone market fell for the second consecutive quarter. What does that tell us about smartphone consumer demand trends and general preferences in the Indian market?
Yeah, thank you for bringing me. The second consecutive quarter of decline, that tells us that there is a stress in the consumer demand in the mass segment. We have to note the fact that Indian market is very value conscious. So less than $200, which is Indian rupees, about 16,000 rupees, is still about 50% plus of the market. And that's where the stress is. So the mass budget or the mass segment is not growing. And most of the brands are also playing the game in the 200 to 400 segment and 400 segment plus. They want to increase the ASPs. They want to bring those consumers. So that's why the volumes are going down, although the value can grow in 2025 as well as the average selling prices go up. But the fewer number of consumers are buying lesser phones, and they're replacing it also little longer. That's also reflective that there's a consumer stress that because of unemployment, inflation, rupee depreciation, the phones have also increased. The prices have gone up in the past 2-3 years, and that's why there is a stress at the the bottom of the pyramid.
That's interesting. What are the implications then, Navkenda, for the full year? And can we go as far as to say that the mass market for smartphones in India has peaked?
We should not say peak. See, India is about 1.4 billion people, most populous country in the world. We still have a penetration of about 50% plus, so about 700 million smartphone users in India. So there is a huge headroom for growth. The only thing is, which are the brands which can get that growth. So obviously there will always be demand at the bottom of the pyramid. They will just replace it. So rather than focusing on the volumes, most of the brands are now focusing on the value and increasing the prices. The second-hand market is also another factor, which is meeting some of the demands of those mass market consumers. They're going to the second-hand market, and they are they're bringing those devices home rather than buying a new, because a new device is much more expensive. For this year, we believe the market will either grow by very low single digit or drop by low single digit. It's very difficult to predict a growth in this market, at least in 2025.
Navkenda, what confuses me is, as you pointed out, the mass market was under some stress, and that's a tell on slower economic growth and conditions, and that's weighing on the consumer. Why then did we see growth in the premium segment of the smartphone market in India?
Yeah, so that's an interesting, obviously, there are layers to it. So what we have seen in the past 2-3 years is there's a K-shaped recovery has happened after the pandemic, if there's a word called after the pandemic. But the richer segment, the top 10-20% are, their incomes are increasing, they're getting richer. The bottom 50-60%, that's where the stress is. The unemployment, the organized sector has not seen such growth. And that's why Apple has, Apple is one of the brands which has reaped most benefits of the premium growth. Apple has been growing for the past 2-3 years at a tick of about 25-30%. And we believe this year also, Apple will do well. Last year, they did about 12.5 million, shipments. This year, they should be about, 14 to 15 million. And that's a good growth because Apple's average selling price is about 3 times the average, average selling price of the market. So Apple is one of the beneficiaries of that, and premium segment is growing because of Apple. And second thing, many of these brands, including Apple and Samsung, when they go in the mid-premium and premium, since the consumers cannot purchase it as a down payment, they're giving buy now, pay later, some of the EMI schemes or offers, from third-party financial institutions. And that's also helping some of the consumers who are in the market for a mid-premium segment bridge the gap and actually pay per month, to a premium. Because we have to remember, India is not a telco market. There is no telco play here in India. It's entirely open, online and offline. So consumer doesn't walk into a telco store in India to buy a phone just like a contract in Singapore or other Western markets.
And was it the iPhone 16, Navkenda, that helped Apple stay ahead of the curve in India?
Absolutely. And iPhone 16 was a good surprise because it's a latest gen. Because otherwise in India, about 2/3 or 60% plus of the sales for Apple comes from the previous gen models. But iPhone 16 has started doing well, and now Apple is producing most of the phones in India.
It's interesting because India approved its 6th semiconductor plant, a JV between HCL and Taiwan's Honhai. Navkenda, does that appear to be something of a prelude to maybe the entry of Apple and Apple relocating manufacturing from China into India? And if that happened, then would that give them the edge that they need to really dominate the smartphone market in India?
So it's a prelude. So we can say actually not a prelude because Apple is already producing about 40 million plus phones in India. That's about 17-18% of their global production needs. Apple does about 230-240 million globally per year. So they're already producing about 40 million, and we've already seen that Apple wants to meet the demand for USA from India. That needs about 60 million, per annum, plus another 15-20 million for India. So about 85-90 million needs to be produced in India. So Apple is already, on the way to expand and actually double their lines. This just the chipset and all these JVs. That's a prelude to that. The higher value components being produced in India. And that's a prelude to that. Obviously, this will take a little more time, in about 3 to 5 years kind of time frame to set up, because these kind of chipset plants are not done for 5-10 years. These are about 20-30 year and huge investment, and you have to have serious partners also. But yes, this can be called a prelude, but Apple is already on the way to make India a serious China plus one player, at least for the iPhones.
It's interesting, isn't it, that three major Chinese smartphone brands are among the top sellers in the Indian market, despite, of course, Xiaomi suffering a 42% drop in shipments. What does that tell you, Navkanda? Are Indian consumers largely agnostic, or do broader politics and geopolitics come into it?
No, Indian consumer has always been agnostic to any of the skirmishes or even India-China geopolitics stuff, because when it comes to spending money from the pocket, these brands are able to give most bang for the buck. And since 2016, when Xiaomi entered 2015-16, Vivo, Oppo, Xiaomi, Realme, Poco, these brands have really done well in India. They're able to give the consumers the right specs at the right price point. And now, interestingly, they're doing omni-channel. So India is a very interesting market since there are no telcos, as I mentioned earlier. It's online play and offline play. So now omni-channel is happening because Indian consumers still like the touch and feel. They go to the multi-brand outlets, mom and pop shops. So most of these brands are doing well, and that's Vivo is a testament in that. They have really done well, across segments. Even the price segment, mass and the mid-premium also, and they're able to reach all the channels. So Indian consumer is not doesn't worry about India-China skirmishes.
What about Make in India? Reliance Jio has launched their own line of smartphones. Life offers a range of affordable smartphones. Then there's Lava, Micromax and Carbon. When will they be meaningful contenders?
It looks very difficult. Life started when 4G started coming in India 2016. But by that time, because Reliance Jio as a telco wanted to seed the market with a 4G enabled phone, but by that time, China market has already moved to 4G, and all these brands brought those 4G models in India at a very affordable and palatable price points. But other Indian brands which you mentioned about, for example, Micromax, they've moved into production and the factories and the assemble in India. All the other brands, it's very difficult for them to. Lava has been doing well, but to get a meaningful share, it's very difficult to fight the marketing and the product might of the China-based brands.
Navkanda, we'll leave it there for now, but I'd love to have you on and talk about how much the AI-enabled smartphone market is perhaps worth in India and who could get the lion's share of that pie. But in the meantime, thank you, Navkanda, for that analysis. Navkanda Singh there from IDC.
My pleasure.
Right, moving on. India's Tata Power seeing profits rise on rising demand and a push towards renewables. We'll hear from the CEO about the business going forward, coming up next. welcome back. Indian markets are just joining the trading day. Let's take a look at the Nifty 50, which is looking a little bit wobbly at the open, but nothing too disastrous. It's, let's call it flat at 24,643. And we are seeing some weakness in the Indian rupee against the US dollar. 85.52.80 is where the exchange rate stands. Let's move over to earnings, and Tata Power reporting a 25% rise in profits. If we don't calculate exceptional gains, the company still saw a 16% surge in profits in the fourth quarter. Tata Power also recorded its highest ever revenues in Q4. The integrated power firm has been ramping up its renewables business with multiple deals. Tata Power is targeting 2 gigawatts of renewable capacity in FY 2026. I'm delighted to say that Praveer Sinha joins us now, CEO and MD of Tata Power. So welcome to Inside India. And Tata Power, I must say, has been something of a sustainability pioneer in India. It's the first Indian company to announce a goal of carbon neutrality by 2050. You later revised that to 2045. Where is Tata Power on that transition? How challenging has it been? And how supportive has government policy framework been for you?
First of all, good morning to all your viewers, and such a pleasure to be here on this show. You're absolutely right. Tata Power has been the first utility in the country which decided way back in 2020 that we will take the energy transition to the full extent, and to that requirement we have been only promoting new and renewable energy projects. What we have seen is that in last 5 years, we have added huge capacity, whether it is for solar or wind, even battery storage. And now we have large number of pumped hydro and hydro projects which are coming up both in India and Bhutan. And we are right now 44% of our installed capacity is clean energy, which will become 70% by 2030. And definitely it will be 100% by 2045, by when we expect to be net zero. So I think Tata Power has been right in the front while delivering our promise of moving towards sustainable energy. And we do find that the government support has been phenomenal in this direction.
And so Tata Power is on schedule and on budget to add 5 gigawatts of renewable capacity over the next 2 years. That time frame still holds, does it?
Yeah, absolutely right. We are very much on track. And this year, FY26, we've targeted that we'll do a capex of 25,000 crores, which includes 50% in renewable sector. So I think we do expect that in next 2 years, we'll add 5 gigawatt. Which is already in the pipeline. And all our new initiatives on pumped hydro and the hydro plants have also started. So 2030, we will become 70% of our installed capacity will be from clean energy.
Let's talk about solar component to the renewable revolution, Mr. Sinha. India's solar expansion has been hindered by its reliance on imports, mainly from China. But is the development of a domestic solar manufacturing base as a pillar of Make in India, how is that progressing and proceeding? Is that taking root? And what sort of significant milestones for Tata Power in particular for solar cell production do you have in mind?
So I think the solar manufacturing, both cell and module, has progressed in last 3 years. Tata Power itself has set up a 4.3 gigawatt of cell and 4.3 gigawatt of module manufacturing, and the plant is fully operational now. And we'll see the full year's result in FY26. We also find that many of the other developers have also set up such facilities. In fact, for module, we nearly have about 70 gigawatt either under construction or have been completed. And for cell, it has been little slow, but I do expect that in this financial year, large capacities will come up. So I believe that the government initiative, which was through the PLI scheme of the government, production-linked incentive scheme, as also promoting that there would be some trade barriers in terms of not allowing import of such modules and cell, is helping the Indian industry to set up such facilities and become virtually self-sufficient in the next 2 years.
Mr. Sinha, how challenging has the day-to-day provision of power been and the consumption of power been in an environment where we've been seeing climatic extremes, temperatures between 40 to 50 degrees Celsius, very unpredictable monsoon season in India, and this really challenges this issue of intermittency of renewables, big swings of power usage. If capacity is shifting increasingly towards renewables, then what provides the base load, and how do you reconcile that?
So the growth in increase of power consumption in last many years has been around 5%, and this is the type of growth we saw last year. It was little shade less than 5%. And this year also we are targeting that there will be a growth of nearly 5%. And we do expect that going forward, the demand that will be there will be basically in two sectors, I would say. One is the demand that has happened because there is huge amount of consumption by the residential and commercial because of air conditioning load. And the other is the industrial load, where the industries have been growing at a very good pace. And considering that, I think the Indian power sector is geared up to meet the requirement. We have seen huge capacity additions that have happened last year. We had a renewable capacity addition of nearly 27 gigawatt, and there was also some of coal. And we do expect that going forward, the demand that is there up to 2030 will be very well met by the capacity additions. We, of course, have a challenge that with the renewable comes intermittency of power, and how do we, in those hours when we don't have solar and wind, how do we meet the requirement? Fortunately, in those hours, we have the backup of our coal-based plants and some of the gas and nuclear plants, and also hydro plants. So I do expect that the transition that is happening is designed to cater to both solar, non-solar hours, and we will be able to cater to that requirement.
So the US tariff structure and regime as it applies to solar panels, and we know that this is all very volatile and subject to change. Is that a challenge or an opportunity for Tata Power?
I think right now most of our supplies are within the country. We have a commitment for our own projects as well as rooftop and the third-party EPC that we are doing. I don't foresee that there would be any challenge as far as Tata Power is concerned. In any case, we were not a very big player in terms of, India was not a very big player in terms of export to US. And I think with the way the demand is increasing in the country, we would possibly require all these manufacturing to cater to the Indian requirement, which has a huge appetite.
So is nuclear an option for Tata Power? And what are Tata Power's plans to develop nuclear energy, whether it's SMRs, the new generation of nuclear generators? Controversial, yes, but past energy crises have proved, haven't they, that all options need to be on the table, even more so now, given the AI boom in India and globally and the need for reliable energy sources.
I think nuclear will play a very, very important role in the energy transition for India. And for Tata Power also, we are looking at it with an expectation that once the changes in the law happens in terms of the Atomic Energy Act and the and also on the third-party liabilities that is there, we will be in a position to take forward some of our plans to set up these nuclear plants. We are looking for all types of technology, whether it is for the SMRs, which are there, the Indian technology, as also the technology from outside India. and also issues related to that in terms of sourcing of fuel, sourcing of equipment and technology, and what do we do with the spent fuel. So I think there are a whole lot of things that needs to be finalized, but we stand committed that we will examine this very seriously, and it will become an integral part of our energy transition plan.
Mr. Sinha, I'm very grateful for your thoughts and your insights on this evolving landscape for energy in India. Thank you very much indeed for joining me on Inside India. Pravir Sinha there from Tata Power. That's it for us and this edition of Inside India. Do keep watching the network. Dan Murphy and Access Middle East is up next.